Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Monday, the 30th of January, 2023, 6:35 p.m. Central Time. And it's cold. We're going to be about 0 in Chicago tomorrow. We got some snow on the ground. We're going to be in the 40s next week. This is now, for us in Chicago that live here, this was a very mild winter. I hear New York's had one too, so it's not the worst thing. I was looking today on TV too, and I heard about valley fever. I went to Arizona State University when I was much, much younger. Got my bachelor's degree there, in fact. And to make a long story short, valley fever was around at that point. I luckily didn't get it. But I'm hearing the climate change is bringing that on. They have a vaccine for it. There's no cure for it, but there is a vaccine against it. I hope they release it. I keep up with it. I like Arizona. I go back with my buddies on a regular basis when I can. All right, so as we take a look, we're getting a bounce tonight after a pretty good break. You're getting the break in the metal markets too. Now remember, for all practical purpose, the working people in China have gone back to work today. The holiday doesn't end, though. You get a series of lantern holiday and all. Ends up on the 5th. All right, the New Year pattern is pretty much over. You're in one of these, the last week of everything. But a lot of the traders probably have been required to go back to work. And I think there was disappointment that we didn't see them come out of the gate with big buying, and the market did a bit of slipping. You hurt all the currencies against the dollar. They're getting a little reprieve tonight. But let's face it. Tomorrow you got the employment cost index, you get the conference board numbers, you get the Chicago PMI numbers coming out, you got the API numbers coming. I'm doing this from memory, and I know there's, Schiller, you have that too. So you're going to get all these that come out, and that's leading you to the big day of Wednesday when we get the Fed coming out with their announcement of monetary policy. It's widely baked in that they're going to do a quarter point. But then we get into the speech, and the speech will be very, very important. And it's from there that I still expect that Fed Chair Powell will evoke that he's not going to make a Paul Volcker mistake. I don't know if he'll mention Volcker or not, but he's not going to come back and pull this interest rate hike and possibly further hikes until he feels that he's done a couple of things. Number one, beaten the inflation market. And in order to do it, he really has to create some weakness in labor. And we'll see in the labor costs that I did see that the market is expecting them up 1.1%. But as I said, that's what the Fed wants to see. And on Friday, we get the all-important non-farm payrolls. Did the Fed have a chance to take a glimpse of it? I don't know. I don't know what they see and don't see. That's the reality of it. But we will see what it is. A strong set of numbers, just, even for the diehards, it should say the Fed isn't ready to back off. Come March, that's when I would expect to see the big debate. Is there another interest rate hike left in it before the Fed sets the pause button? Setting pause isn't dropping rates. Setting pause is pause. They can still go up from there. Going down and having to go back up, welcome to Paul Volcker's world. You've joined it. He doesn't want to do that, our Fed chair. I don't think he will. I don't think he'll fall into that trap. This weekend I wrote about what happened with Mr. Burns, who was Fed chair, and Paul Volcker, and he's not going to want to be associated with doing something too soon. I think he doesn't want to be too late. I think he's trying his best to thread the needle and read the data. That'll probably give you, and we have a lot more data compiled, a lot better than we did at those times. Let's see what he can do. When you look at the S&P, you're in a pause. You came down 1% so far for the week. That's where you're at. Okay. You can look at the chart action and say, okay, we still have higher lows, higher highs, which means the uptrend is intact, and it stays intact until you take out that low. And guess what? You're knocking on the door of a potential, swing to the upside of the 18-day average getting over the 200. Here's your 200-day in gray, red, the 18, another day or so, they're there. Now, it could hit it and come right back under it. Obviously, the market's like a magnet now. And when you get a magnet first, you got up 2 days ago, right? You hit on Friday, the upper Bollinger Band area. That's where I think the pros came out of this market. I mean, just step back here and take a look. The high on this day was 41.09 and a quarter. The upper Bollinger Band was 41.16 and a quarter. You round down. So you're in the ballpark. There was a window envelope there too. And if you get those, and I review these every morning, if you join me in the mornings, and that's what I'd love you to do, first thing in the morning at 5:30, I do a recording, and then it's posted on our website about 6:15, and it really gives you what I'm seeing. Buy here, sell there. Here's the reasons why. The charts are right in front of you as I'm dissecting them. You really learn a lot. You get some ideas. But as you can see here, backing off right now. Okay, I still see the support there. You have to prove to me you can do something more to hurt the market. But the important thing is what happened with the slow stochastics. Now, if you and I come and take a look at the slow stochastics, on the close, if they got over 20, they got to get underneath right here. I'm going to come back one more day so you can see it. They're over 80. If you get the market under 79, out you go. I teach this in my enhanced Bollinger Band course. You learn how to do the figuring out of it and so on. And you did. So that's today, and this is where you're at now. The number's not recovering right away. The odds favor that price, if it's going to drop, and I expect it will, unless you get back over 41.09 and a quarter in fast steed, I'm expecting it to get back down here and test that and try to figure out what the next move of the market is. When you come to the NASDAQ, right now, not during the day. Here, let's come back here. Here's the close today, 82. But where did you close? I teach you when you close near the low, you're going to drop the slow stochastic. So intra-evening, we are losing that. That's not the same as what the S&P did. It's got to prove that it'll stay down. But what's the real picture here? The real picture is the first challenge of the 200-day average in gray in the Bollinger Band. I teach consistently. That is where I think the big money's going to come out of the market. Out. It doesn't mean they're going short. Out. The trend had been up. That's the spot you're coming out. We didn't have anything like that in the Dow. It's just been a market that's been whipping back and forth. It's got still an uptrend at work. It's on its support at 33,792. It would have to break under this low to break the pattern. Momentum is flat. The trend is up. The question is, would you want to buy it going into all these reports? And in the Russell, you're losing the embedded reading tonight. So if they stay lost, we've lost the momentum. But they're wobbling right in front of the FOMC and in all of tomorrow's reports, which I'd expect. If they let go, wherever the 18-day average is, should be the support of the market. Now, when we look at the VIX has been in a downtrend. It did not make it to the lower Bollinger Band, where just like it hit here, I'd have said that's where the pros are writing calls, looking to get back to the 18-day average, and it's still in a bearish trend. So the market's down unless it gets up and over 2090. And if it does, it doesn't start an uptrend. It just negates the downtrend. In the T-bond market, I have been calling that I thought we'd get back to the 18-day average, what I call the line in the sand, the demarcation point for what's bullish and bearish. When the market's settling over it, I have a bullish bias. Under it, a bearish. And I filter my other technical indicators with it. Well, right here, you're about as neutral as you can be. The trend is down. The bias is either side of unchanged. In the 10-year note, now this is a little more bearish. Lower highs, lower lows, if it picks up momentum, and it's already oversold, by the way. Any reading under 30 from my way that I teach charting is oversold. Then the market, let me get you over here, right there. Then you can get down here possibly. Getting there is not going to be the easiest task, all right? It can go there. There's no reason to be long here. To negate the downtrend, you got to get back over 115.13. In the dollar index, the momentum today took you out of short positions, as far as I'm concerned. This is how I would have told you. My paid subscribers, out. Here's the market at 117.29. You lose the embedded reading when it opens tonight because it closed near the high. I wouldn't be surprised it immediately makes a run at the 18-day average of closes and sort of stalls there. And if that's doing that, then the eurocurrency lost its reading, which it did, and it wouldn't surprise me if it wants to go back to the 108.44.5. If you take the enhanced Bollinger Band course, this all starts making perfect sense to you. If you don't, you're saying, well, what's he talking about? I'm sorry, take it. Okay, in the pound, you are flirting with losing the embedded reading right now. If we come to where the settlement was today, you were at 80.19. So it's got to prove that it can stay lost. It's not looking good. A pop over the highs of Monday would look pretty good. Then you'd be putting back at 125.46. But again, a lot of traders are probably coming out of these markets now saying, you know something? Maybe we wait, see what the ECB and the Bank of England and the U.S. Fed do, come in afterwards. Maybe we see even the jobs data get out of the way because it could surprise and keep the Fed on track. Currency traders are going to be watching all this. Not the ideal time to be a hero. In the Bitcoin, got all the way up here, outside day down. I'm a thrilled trader. I was telling traders last night, there's reasons. Again, window envelopes. Join me in my morning and you see where the window envelopes come in. Window envelopes are a standard deviation from the 18-day average, but instead of making it a standard deviation, I use my swing lines with it to come up with a different type of count that I have found over the years to be better than the standard deviation. In the Brent versus WTI crude, 702 has been the high. You're at 637 differential in price. Okay. But both are in a downtrend, and I mentioned it. They lost their embedded readings. Not here, right here on Friday. And when you do that, you often go to the closest main moving average. At a minimum, I'm looking for 85.12, and the market offered it right to me. That's, again, the course that I teach. WTI wasn't the same, didn't embed, so I don't worry about it. Heating oil, overbought, correcting. I don't know that there's a lot of downside here. If there is, then the 285.40, but I have my doubts about it. And I'm not bullish. I don't like the setup. And I don't know what to do with nat gas. Wow. It has just fallen so much. It's so hard. It keeps hitting the entry spot for shorts that I teach in the enhanced Bollinger Band course, and it keeps going back to the Bollinger Band. I've heard people talking $2 in it already. In other words, almost another third loss in price. That's because there's a lot coming online, and we're not exporting enough yet. But that Freeport terminal is coming. That will kick it up. And admittedly, you're at a funny time. It wasn't that cold this winter. So the demand, everybody lucked out. You know, let's call it the way it is. This is even a benefit. It's not inflationary. So the Fed's got to be very pleased with that to a degree too. I certainly would be. Now, I want to remind you, we write a lot. I give you my information. I don't know if you're aware of it, but I put out 2 updates a day. And in those written updates, I give you trade ideas, but the real trade stuff comes in the videotapes along with the updates I write during the day. They are the best package. The 2 together, because I'll put out special updates. I want you to do this and that in terms of trade. Then my trade ideas, I write a letter because I am so used after 50 years to reading journals that some traders would try to get out every night. You don't have that much to say every night. It's impossible. But what you do have to do, in the futures especially, is cover the different sectors. If you see something, point traders in the reason. Why? What are you seeing? Like tonight, there's not a lot that you write about. It's tomorrow that you write a lot because you're getting the first real employment cost number. You're getting the consumer confidence, the Chicago PMI. You're getting all these numbers. And then, of course, I got a lot to do on Wednesday and Thursday as I write about what the different banks are doing, where I think that'll carry. And then on Friday, the jobs report. I'll be a busy boy. What can I tell you? I want to give it to you. So if you haven't tried it, just take your cursor, move it to the top up here, go to free offers and sign up for my free offer to it. Get on that we'll give you a 2 weeks trial to it. You see if you like and it makes sense. You'll be getting to look at, if you haven't tried it, I'm telling you, we keep a good list. We will look to see everything. But if you haven't tried it, I want you to see the morning videos of the ETFs and the futures, my futures, what I write, and the special reports. And I promise you, special reports are coming out possibly this week. I just want to get into where they make sense. Wouldn't you? Why am I going to write a special report or do something special right in front of all this important data? Right afterwards, that's where the analysis comes in. Again, I'm Ira Epstein. Thanks for listening to me. If you like me, give me a thumbs up on YouTube if you would, and I will see you all tomorrow. Take care.